Get ready, start. Nonetheless, before moving further, it is important to understand the basic difference between GST and VAT. According to Mukhopadhyay within bracket 2014, GST can be seen as a VAT including service tax. However, strictly speaking, if service tax is excluded, it is only VAT. Added to this, for private sector or corporates, the turnover tax with a clear credit of input tax is synonymous to a VAT. Therefore, GST can be seen as a reformed VAT regime including service tax. It is important to understand at this juncture that VAT is not a progressive tax, rather, it is a proportional tax wherein the same tax rate is applied across all irrespective of the income class of the taxpayers. Naturally, it has nothing to do with social justice or redistributive objectives. Having said so, it is also true that post GST implementation, there will be a single comprehensive value added tax on both goods and services, which will be levied at every stage of a formal transaction. Since GST will be levied only on the value added during a particular stage of production, so the burden of taxation will be shifted to the final consumer. Not to worry about the magnitude of the burden, because the final consumer need not bear much heat as the taxes paid at earlier stages will be set off. Also, it will minimize the complexity that arose due to multiplicity of taxes, broaden the tax base for indirect taxes, and thus is expected to make tax evasion less attractive. Now, to calculate the efficiency of a VAT regime, economists calculate the VAT revenue ratio within bracket VRR, which is simply the ratio of actual revenues collection vis-a-vis the expected revenue, assuming a single rate and full compliance. So, from a purely revenue perspective, a VRR close to unity would be preferable than otherwise. Taking all these into consideration, the report submitted to the 13th Finance Commission by the Task Force on GST proposed a flawless GST. In this, they clearly mentioned that since there are ample issues with VRR, the task force actually expanded scope of final consumption given the constraints imposed by the national accounts to compute the potential tax base. As per the recommendation of the said tax force, whole objective of a GST as a resource mobilizing handle would only be successful if and only the policy deficiencies could be removed. As per their estimates, even then a VRR would be around 0.76. According to this report, one of the main deterrents to low realization was the extent of exemptions, which was around 0.64 in the pool of potential tax base, and thus reducing the actual collectible tax base to 0.36. One can easily gauge about the actual collections from this meager pool of collectibles. To simplify, out of every 100 rupees of potential tax base, rupees 64 would be lost due to exemptions, and the residue of rupees 36 is the amount of collectible tax. So the actual collection with all possibilities would be even lower and thus hamper the revenue pool. Stop.